Good morning, everyone. My name is Sriram from the Commodity and Currency Research Desk at Reliance Securities. This is the Commodity and Currency Outlook for 26th August 2022. Starting with the commodity side, starting with energy, international and domestic oil prices struggled in Thursday's trade and ended lower as investors braced for further supply from Iran, as a deal has been hashed out by the world powers and Iran. But of course, looming interest rate hikes by the U.S. Federal Reserve and softening U.S. gasoline demand kept upside limited. Looking ahead, prices can remain range bound. Prices have started on a positive note this early Friday morning trade, but markets can remain range bound as investors will look ahead to that statement by the Fed Chair Jerome Powell tonight. So that will be the key trigger for the markets. But recent statements by OPEC about output cuts and recent news about suspension of outflow from the Caspian pipeline from Russia and Kazakhstan can cap the downside going forward. So we see the markets can remain range bound with a positive bias, and the range for domestic oil prices will be anywhere between 7,300 on the lower side to 7,600 on the upside of things in today's trade. Briefly on natural gas prices rose in yesterday's trade after weekly storage data suggested that the inventories increased by about 60 BCF, but in line with estimates of 58 BCF from a Reuters poll. But markets can continue to gather further momentum as hot weather conditions in the US and firm demand will continue to push prices higher. The European natural gas prices has also remained elevated, and that can also keep prices supported in this Friday's trade. So prices again have started on a positive note and can trade with a positive bias, and the range for natural gas in the domestic side will be anywhere between 730 to 760 on the upside in today's trade. Moving to the bullion side of things, bullion prices recovered in yesterday's trade, tracking the weakness of the US dollar, which remained weak in a choppy trading session. The US Federal Reserve in Thursday's session were reserved about the size of the interest rates in their upcoming meeting on September 20th and 21st, but they continue to point out that further rate hikes is a necessity to cool the rising inflation. Of course, US inflation has remained elevated on an annual basis at 8.5%. So the main trigger for the markets will be again the Fed speech tonight. Of course, we have the Fed favored inflation gauge PCE price index, which could also move the market, but the main trigger can come from the Fed speech. So till that time, markets can remain extremely range bound, and domestically we see a range of anywhere between 51,300 to 52,000 on the upside of things. Moving to the base metal side of things, base metals recovered in yesterday's trade as again the dollar remained on the weaker side, but a firmer than expected guidance by the Chinese authorities and further stimulus measures taken up by China supported sentiments in yesterday's market. China stepped up stimulus by about 1 trillion yuan of measures to help the economy recovering from the COVID-related disruptions, while property sector wars and recent power shortages has also prompted Chinese authorities into action, and that can be a key trigger for the markets in the upcoming sessions. But today markets can await the Fed speech tonight, and all eyes will be on that, of course, and till that time we feel markets can remain range bound with a slightly positive bias in this Friday's session. Range for domestic copper will be anywhere between 675 to 685. Finally, on the currencies and bonds, Indian rupee traded in a narrow trading session on Thursday, held in check by strong dollar demand from oil importers, even though greenback weakened in yesterday's trade. However, strength of the Asian currencies, especially the Chinese yuan, which came off session 2-year lows after the recent stimulus measures, helped the currencies yesterday's trade. Of course, rumors of RBI's intervention and further inflows into our domestic equity markets also helped the rupee in yesterday's trade. The bond yields remained elevated as further rise in the crude oil prices can keep the domestic inflation stubbornly high, and this will continue to push prices, bond yields higher. In the overseas market, the dollar index and the benchmark 10-year yields slipped on Thursday's trade as investors awaited the Federal Reserve chairman's speech. Looking ahead, we see that the rupee can remain range bound. It has opened pretty flat this Friday morning. Higher oil prices and a weak start in the Asian and emerging market peers will keep the appreciation bias capped, but markets will be range bound ahead of that speech. We have the August expiry as well, which will also keep the investors on their toes and keep the markets in check today in today's session. So range for the rupee will be anywhere between 79.60 to 80 on the upside of things. So that's it from our side. Thank you for listening. Have a pleasant day ahead and a weekend ahead. Thank you.